You're listening to Funding Options for Your Business. We have 10 different sections that we're going to be covering in this training, and the first one is defining needs and determining repayment. My name is Jane Rich, and I am a business advisor with the Northeast Indiana Small Business Development Center. Goals for today's session. First, we want to make sure you understand how to define and quantify funding needs for your business. We also want you to learn how to document and communicate business needs in both traditional and non-traditional funding sources, and discover how to apply for loans. Financing is one of the last steps that a business should take in undertaking a new project or in starting. It isn't one of the first steps. Why is that? You need to be able to communicate your ideas and your needs to other people. Banks do require a business plan that includes a narrative and projections for all startup businesses, and they often also require business plans from existing businesses when evaluating a loan request. The business plan documents the who, what, when, where, and why of your loan request. First of all, we need to know what is the need for your business. Does your business need money to begin its operations? Do you need to purchase inventory? Do you need to buy equipment or real estate? Or are you in a situation where you don't have enough money to pay payroll this Friday? Are your needs short-term or long-term in nature? All of those questions are important to be answered for a business loan request. Also, a lender or funder is going to want to know if you have money or the business has money to support part of the need, the request. Do you have equity in this? Is there existing cash flow within the business? And what is the leverage of the business? How much debt does it already have? And most importantly to the lender, how do you plan to repay borrowed funds? It's pretty simple. Debt can be repaid in three primary ways. You can repay debt from your ongoing cash flow within the business by selling an asset within the business outside of what you do in every day, and you can also refinance existing debt with new debt to repay it. You need to research and document what you need. Information that a lender or funder are going to require will include a business plan, financial projections, personal tax returns for the last 3 years for each owner of the business, personal financial statements for each owner of the business, and historical financial statements for the business if it's already in operation. Typically, a bank would want to see 3 year-end financial statements, which include balance sheets and profit and loss statements, and also tax returns. Final thoughts. You really need to know where you're at in your own personal credit history. Banks do look at the credit scores of the owners of a business, in addition to evaluating the business's ability to repay debt. This is known as evaluating the character within the business loan request. And they're looking at the character or the ability of the owners to repay their own personal obligations. If you don't know your personal credit history, you can obtain it by going to www.annualcreditreport.com. This is a site that is hosted by all 3 major credit reporting agencies. And be prepared, be ready to talk to the lender about what you need, why you need it, and how you're going to pay it back. And be willing to share the financial risk in the transaction. If you have any additional questions about getting ready to apply for a loan, please feel free to contact me. Again, it's Jane Rich, business advisor with the Northeast Indiana Small Business Development Center, and our office number is 260-481-0500, and my email address is jrich@isbdc.org.